Hello and welcome to another update video about Bitcoin. Well, it's really good to see some volatility, some movement in the crypto market. I think we can all do with a bit of upside after this long downtrend, and I guess nobody really will have a problem with finally starting the bull run, because if we start the bull run and if people missed the absolute low, we would still be super early. But I don't think we're starting the bull run yet, and we get to that in this video. But overall, in the top 10 currently, of course, Cardano sticking out absolutely, 25% to the upside. I mean, we had the Vasil hard fork. We talked about we have the Vasil hard fork coming. We talked about the potential of that. Yeah, in a bearish environment, of course, it's unlikely that this really triggers new all-time highs. And my view is it probably won't trigger new all-time highs in the next few weeks, but you never know. And we're going to keep close eye on that in the Cardano videos. But this is a Bitcoin video, so let's take a look at Bitcoin. In my opinion, from a high-level point of view, we are still here in the wave 2, in the overall wave 2, after we made a wave 1 back in April 21. That was a first impulsive wave. We then came down in a 3-3-5 pattern here. 3 waves in the wave A, 3 waves in the wave B, 5 waves in the wave C, an expanded flat pattern in which the wave B overshoots the preceding wave. And in the wave C, we are coming down below the low of the wave A in June, which was at 28.6, 28.7K. So that has been my primary scenario since November. We have come into my target area below 28.6, below 28.7K. I've told you as soon as we reach it, we can at any point in time reverse back to the upside. So theoretically, the low could be in for Bitcoin. I talked about that, and that is also still a possibility. However, a fairly unlikely one in my opinion, but it is technically possible. And I wouldn't be super surprised if the low is already in. But I did talk about that because the higher level wave count has completed the requirements for the correction. I have to repeat that time and time again. I did that a lot of times because people just need to understand that there is never 100% certainty. For me, it was very clear until we reached that area that we will get into this area, that we will actually come lower. But now we are in this potential turnaround space. Yeah, but looking at the shorter time frame, it for me still doesn't look like that we have the low already in. So I primarily still expect lower prices here. But of course, there is never 100% certainty, as there never is, right? And there is no crystal ball, so we can only go with probabilities, and there are unlikely events happening all the time. We also need to understand that. But we try to make sense here of the chart. So we came down here from this high back in April, the wave Y, down in an impulsive move down, in a 5-wave move down. That 5-wave move, in my opinion, is not complete yet. You might see it on the screen here in red, the wave 1, the wave 2, the wave 3, in which we are currently in the wave 4, and we might move down in a wave 5 in the next step. There would be nothing unusual, and the pattern we are currently doing at the moment is really similar to the pattern that we did here in February, March, and also the pattern that we did just before Christmas, which is this one here. So all of these were a wave 4, and they all look very similar. So at the moment, we are here coming up. My primary expectation was we were going down straight away after we made a first attempt to move down impulsively, but we never really broke the 28.6K level, unfortunately. So we reversed to the upside and broke even a triangle pattern and are now in this WXY pattern that I explained in the previous video. Now we've reached already in this pattern the target area that I gave you for this retracement to the upside. And just to remind everybody, what is this target area that you can see in the screen there in yellow? It is the area between the 38.2% fib level and the 50% fib level. So between 32.1K and 34.2K, this is the area of the highest where the wave 4 would retrace to with the highest likelihood. Yeah, it is not guaranteed to get there usually, because the 23.6% fib level is already the minimum it needs to do. So the 23.6% fib level here was at 29.5K. That was reached, and for the last few weeks here, the price has been really drawn to this fib level like a magnet. Yeah, it's been moving around. Now, however, we've moved up and we broke above that level, and we also touched the 38.2% fib level. And you can see again how relevant these Fibonacci retracement levels are. Yeah, and maybe I should have been more short-term bullish in this case, because the 38.2% fib level, as I always say, is normally the area where you would go to with the highest likelihood. And I explained that scenario in detail in previous videos, but it has now become obviously the primary scenario after the other one has been invalidated. So primarily I would expect further upside now into this target area, and we've got this area spanning between 32.1k and 34.2. If we move higher than that, and I'm talking about significantly higher, maybe around the 88.7% fib level here at 41k, then we really have to consider that the low is already in, and then I would be quite optimistic that the low really is in. At the moment though, still due to the corrective three-wave-like nature of this overall move, I still primarily have to expect that the low is not yet in and we will come down even lower. But short term, now more upside is possible. And why? And we can take a look at the chart here. So looking at that, this is the wave count I explained to you in detail in the previous video, so I won't go through it again. But we had the wave X low here. We started an ABC up in this wave Y. A wave Y is a three-wave pattern. However, the wave C within the wave Y is a five-wave move. So we have here the 1, 2, 3, 4, 5 pattern. And we are now in the fifth wave here in yellow. And in this fifth wave, we probably completed the wave 4. Yeah. And we are now moving up in a final wave 5 of a wave 5 of a wave C of a wave Y of a wave 4, if that makes sense. So that would be what I expect, because while theoretically this high could now be in, the corrective nature of this retracement here makes me quite focused on further upside at the moment. The move up will, in my opinion, not happen anymore should we really break below 31.4k again. Yeah, because then we would make a new low, a new swing low. At the moment, what we need to do, we need to break above certainly 32.2k, and then we will be able to move higher and complete that wave 5 in green. What would be a target for this wave 5? Let's take a look at that, and then we can also close the video so we can start it here. We do the fib extension and we use the length of the wave 1. We add it to the wave 4. And I mean, this is now an extended, it's an extended wave 5, as you can see here. So normally you would expect for a wave 5, it could be the 100% extension of the wave 1. Now we're already above that, so we go to the next one, which would be the 1.618 fib extension. Now, to be honest, we already reached that. That would be 31.2k, but that could still be a target for a wave 5, sorry. But primarily, I would actually expect now either the 200% extension, which is at 32.6k, or the 2.618, which is at 33.4k. So these are the levels. So all possible, ideally, I would say 32.6 to 33.4k. But another way of measuring actually the target for this move is by looking just at the whole length of that wave Y. And we can take for this the length of the wave W and just checking out what would be the 100% extension here for the wave Y. And this would be 34.1k. So it shows you different kinds of targets in this yellow target area, but they're all landing in this yellow target area. So primarily I would expect the price now to go further into the area here, further upside now possible, before I would expect another meltdown. But at the moment, it is really interesting to observe, and we could move higher as I explained, but my primary expectation is to still move down lower. Now this wave 4 in red could even go above that yellow target area, and to do that it would need to break above 34.3k, and the next target for me would then be the 35.2k level. That's a swing low here, and the next major target would be the 61.8% fib level at 36.3k. So yeah, interesting. Obviously short-term higher price potential due to that wave 5 and the wave Y target and this yellow target area, the retracement of the red wave 4. But then here, ideally in this target area, I would expect at the moment primarily the turnaround for then lower prices, because this move should complete the wave 4 in red, and we would then move down in another impulsive wave down in in a wave 5 to the downside. And as I explained before, if we have this move up in a wave 4 to the upside, an extended wave 4 to the upside, then it means that most likely the next move down won't be as strong. So we had obviously the scenario that we go down straight away from here, which was my primary one at the time. And here it was like, based on the Fibonacci extensions, we would have ended a little bit lower. And I mentioned to you in a few videos ago that if we have an extended move up of a wave 4, and the higher the wave 4 will go, we will move up the targets for this downtrend. So that will be, it's just something to consider and to be aware of. Okay, so hopefully you liked the update about Bitcoin. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye-bye.